Welcome to another market update. It's September the 4th, a Sunday after the market closed on the 2nd. US markets are closed on the Monday for Labor Day holiday, but we shall proceed as normal, starting with the overall market update. The purpose of the overall market update, just as a reminder, is so that it's good to have the wind in your sails. And what I mean by that is that the overall market is in line with the trades that we're making. In a very simple way, if we are buying stocks, then we wanted the market to be trending upwards, and if we're selling stocks, we're shorting them, then we want the market to be turning downwards. So that's why I look at this every week. And a stock chart is nothing complicated, really. Anything more that we looked at grade school, you've got the date along the bottom and you've got the price along the side here, and each notch is where the price closed, and then the lines that is in the going up and down there is what happened between the open and the close. It obviously fluctuates before it closes at that price, and that's what's going on here. And you've got the moving averages. The key ones are the 40-week here, the blue one, and I also look at the 70-week, which is the red one, just as a clue to about what the average direction is doing. So this is a chart of the overall stock market, and this is all the American markets blended into one to try and give me a really big picture view. The New York NYA, which is called the composite, all the stock markets blended into one. And I've drawn a couple of lines on here, so to give you a clue that let's look at trying to get a feel for what's going on. The market is in an uptrend, and it's been that way for a little while now. And as I've said for the last 2 weeks, though, it is getting quite extended. It's a long way above its 40-week moving average now, there's got to be some sort of correction at some point. We're just not seeing any evidence of it yet, which is why I'm getting increasingly cautious as time goes on. Having said that, the sort of stocks I'm trading, individual stocks, are very strong and quite resilient, and that's why I'm choosing those particular stocks. The main point about this, while we look at the overall, the NYA, which is the composite index, is that you hear a lot of talk these days about the stock market's hit a new high, but this chart is saying otherwise, because here's the new high, still back here in May 2015. It's not bettered that high yet, as you can see. It's down here. Not to say that won't happen. And I think what will be the trigger for that is if we can get above this line of resistance here, maybe after pushing down, correcting a bit lower, wouldn't be a bad thing if it went down to about, say, 10,650 even here, and then went above that. But if this thing can get above, comfortably above 11,000, then it will push higher to have record highs. So it's a bit of an inflection point at the moment. If I go to the shorter term chart, this is day by day and only the last 6 months, not over a few years. What I pointed out here is that you see these steps going on here. It pushes up into this new box, bounces around. I'm ignoring Brexit because it was a little bit of an anomaly. Pushes into a new box here and then bounces around. And then on Friday, it just hit the top of this new box. So again, I think what the bulls need to happen is to get up to about 10.9 on the New York composite. What will be bearish though is if it breaks below 10.650. So between 10.650 and 10.850 on this index is what's going on, and that's really going to give us a clue about the short-term trend. I do think this is if you look at the RSI here, which is a kind of indicator about the direction. It's pointed upwards. It was in no man's land last weekend. But it did hit the top of this resistance. To see further upside, I'd want to see it break above that comfortably. But again, getting increasingly cautious. I will be definitely looking to taking any healthy profits that are due, and being cautious moving forward. So in the summary then, longer term trend I would see as, I'm talking about a year ahead of now, I still see this as a bearish situation for the stock market. Valuations are very high, and it's still an ugly looking chart. Medium term, the trend is definitely upwards for now. Very short term, it's still looking upwards, but again, it depends what happens in this box. So we're still very much kind of bouncing around in the middle of nowhere. and just, to be honest, waiting for some kind of, healthy correction before it can carry on moving upwards. So, and these two lines here on the New York Composite NIA between 10,650 and 10,850, I think, are the levels to watch to decide on the outcome. So in summary, short term, which is trading, what we're looking at, I'm saying short term is upwards with a very, very cautious tone in that statement. All right, and I'll speak to you next week.